Mortgage rates dropped nearly 0.2% on Friday in light of the latest BLS jobs report. Grapevine is no longer the #1 hottest city in all of Dallas and Collin counties for the first time ever. There are still less homes on the market today than there were a year ago, even with rates still up around 7%. In the entire country, active listings only went up by 2,939 homes this week, and I'm still running into multiple offer situations. How are these high rates impacting buyers? Will prices ever come down, and what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be looking to sell your property, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for an opportunity. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory doing, and if you stick around until the end, it's my favorite part, the top 10 ranked chart of the hottest and coolest both cities and zip codes in all of Dallas and Collin County. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is August 7th. Let's see what the data is telling us this week. And if this is an old video, click here and this playlist should take you to the latest weekly update. First up is market news. The BLS jobs report that came out last Friday brought us some good news. And remember, the bond markets move much faster than the Fed. So if you're wanting to know what mortgage rates are going to do, if you're waiting to see what the Fed does, you're already too late because the bond markets are moving much faster and they're looking at things like the BLS jobs reports. And basically, the new jobs report is showing that we aren't going into a recession and job growth is slowing without anything breaking. If you look at this chart, you can see that we've held steady and are averaging around 185,000 new jobs added per month over the last 3 months. As you can see on the left side of the chart, jobs being created were out of control. So these last 3 months being way down here is a sign that things are now getting back in control. Wage growth is also not spiraling out of control as many had feared, and we've been steady at 4.4% for months now. Add in the fact that headline inflation is only running at 3% year over year, and for the first time in a long time, people are actually experiencing real wage growth. We also had a decrease in job openings. We've fallen from 12 million down to under 10 million. Jobless claims rose by 6,000 this week, though it should be noted that the 4-week moving average actually declined. So it may be nothing, or it may be the start of jobless claims starting to rise, which the Fed would see as a good thing with regards to stopping rate hikes or beginning to pivot. So these are just more signs that the economy is slowing without anything major breaking, other than the housing market, of course. So coming up this week, this is inflation week. We have 2 key reports coming up. The consumer price index, that's on Thursday, and the producer price index is on Friday. So be on the lookout for those. If we get more good news, rates could get even better. And if you'd like a more thorough analysis of this BLS jobs report, I'll put a link down below to a Housing Wire article. Okay, moving on to mortgage rates. As you can see here, we started last week at a 7.05% and we launched all the way up to 7.2%. Thank goodness the jobs report saved us, and from one day to the next, we dropped 0.17% down to 7.03, which is where we'll start this week. That makes 13 consecutive weeks around or above 7% rates. Now, regarding mortgage purchase applications, we saw another 3% decline this week, which makes for a total of 14 positive and 15 negative prints this year. So, demand takes a little drop, not unexpected, especially considering that rates were up to 7.2% last week. In fact, if anything, I'm surprised it wasn't bigger than a 3% drop. Very quickly taking a look at national inventory. We go over this every week now. The black line is this year. You can see we've had very slow growth compared to last year, which is the green line, where at this time of the year we were headed straight up. And we were actually starting to flatten out. So the worrisome part is you would expect the same kind of flattening to happen here and then coming down and ending the year somewhere around here, with many less houses on the market than we had last year. But the bigger story for you, if you are looking to buy a home this year, is less about how many listings there's going to be and more about the fact that new listings will decline from here until the end of the year, which means your options are going to be less and less. So if you don't like what's on the market now, it's not likely you're going to find something better later. And just to explain that a little further, basically inventory may climb here for the next few months, but new listings are declining every week. So what does that mean? The homes that are sitting on the market causing the inventory to go up are the homes that are already on the market now that nobody wants. The new homes that come on the market that people do want are still going to go multiple offers and go right away. So don't expect just because inventory is going up that you're going to have a ton of new options. You're going to have those same options that nobody wants. So all of this is just evidence that there is no reason to believe home buying is going to get any easier from here until the end of the year. So I say this every week, if you can buy a house, then buy a house. Don't try to time the market. It's a losing strategy. There are still more buyers than there are sellers. And if you're still on the fence about whether or not it's a good time to buy, please watch this video. Okay, taking a quick look at the MLS data. In Dallas County, we had 346 closed sales this week. That's 9 less than last week. We had 438 new listings this week. That's 13 less than last week. And 113 of the homes that closed were immediate sales, meaning they sold within the first week. And that's 6 less than the previous week. Now looking at Collin County, 235 sales closed in the last week. That's 50 less than the previous week. 301 new listings. That's 32 less new listings than last week. But 80 of the sales closed were immediate sales, and that's up 20 from last week. So less homes sold, there are less new listings, and a huge jump in immediate sales, which again suggests that the houses are great, they go immediately, the rest of them are going to sit on the market for here to the end of the year. Okay, moving on to housing data. We're starting out with Dallas County. If you follow my videos, you know that I use this, what's called the Market Action Index. It takes all of this info and puts it into one easy to read graphic to tell us a 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market is it. As you can see, we're still a strong seller's market. Last month, we were a little bit hotter, but almost no change, especially considering rates have been up here for months around 7%. So we're not going to spend a lot of time here. No significant changes. Median list price is still way high. Median days on market is still 35. The amount of homes having price decreases is climbing, but this is normal, remember, because it's those less desirable homes that are going to be sitting from here to the end of the year. They're going to be having price drops looking for buyers from here till the end of the year, so you can expect this number to go up. Inventory has been almost flat this entire time. That's the bad news. We needed that to go way up, as here in the springtime, that's when most people list their homes. And like you saw earlier, the green line that we needed to go straight up like the inventory of last year, it just didn't happen. But that's it for Dallas. Let's look at Collin County. Collin County has been hit a little bit harder. The median list price has dropped a little more, but if you look, this is where we were back in April, almost the exact same. Not a huge change, having the same issue with price decreases for those homes that are going to be sitting. Inventory has totally flatlined. Again, that's bad news, and we're still a strong seller's market at a 48. And if you'd like to be set up on a report like this for your specific city or zip code, just shoot me a text with your name, your email address, and which city or zip code you're wanting to be set up on. Okay, moving on to my favorite part every week. This is the top 10 rank chart. These charts are ranking out of all 84 zip codes in Dallas and 26 zip codes in Collin County. And let's start with the hottest cities list. Grapevine has finally lost its #1 spot. This has never happened since I've been making these videos, and the last place I ever expected to do that would have been Balch Springs. But Balch Springs heats up 3 spots and takes over the #1 spot. Grapevine obviously cools off 1. Carrollton remains #3. Sachse heats up 1. Louisville cools off 3. Richardson heats up 1. Coppell cools off 1. Irving heats up 1. Garland heats up 1. And Plano comes back onto the list at number 10. So the biggest gainer this week obviously was Balch Springs, moving up 3 spots and overthrowing Grapevine, which has firmly been #1 since I started making these videos. And Duncanville moved from number 8 entirely off the list. Now we do the same thing, but we zoom into specific zip codes. The #1 hottest this week is Carrollton 75007, Plano 75023, Richardson 75082, Balch Springs 75180, Richardson 75081, Grapevine 76051, Carrollton 75006, Garland 75044, Sachse 75048, and Mesquite 75150. Now we're moving on, doing the same thing with the top 10 coolest cities and zip codes. And the big news this week is we actually have, for the first time ever since I've been making these, a buyer's market in Leonard, Texas. Remember, a 30 or below on the Market Action Index is officially a buyer's market. So huge news if anyone's looking to buy in Leonard, which I don't know anyone who is, which is probably why it's a buyer's market. But Leonard cools off 1, so Whitewright heats up 1. Blue Ridge, Ferris, and Sunnyvale remain. Prosper cools off 1, Royce City heats up 1, Rockwall remains, Red Oak remains, and Salina takes over the number 10 spot, knocking off Farmersville. So of course the big news, we finally have a buyer's market. Salina is back on the coolest cities list, but an important note for that is Salina and Prosper as well for that matter rely heavily on their new construction, and most of this data is on resale construction. So the resale market in those areas has a harder time because there's still a lot of very similar homes that are new construction, similarly priced, so people go for those new construction homes. The pre-constructed homes sit for longer. It looks like a cooler market, but there's still a lot of home selling. It's just in new construction data that won't be reflected here. Okay, thank you all for watching. As always, if you're looking to buy or sell in the Dallas area, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thanks for watching. I'll see you in the next video.